right, it is the final trading day, in fact, of January and the week. We do see the Dow leading the way, up more than 5%, close to 6% on the month, and higher on the week, too. Well, joining me now with more is Larry Tentarelli. He's Chief Technical Strategist for the Blue Chip Daily Trend Report. Larry, it's great to have you on the show, and I want to hear from you how these technicals look in the market.
Good morning, Kristen. Great to see you. So the technicals look very good. The S&P 500 and the NASDAQ 100 are in confirmed weekly uptrends. Charts are very strong. They're over all the moving averages. And on the S&P, I think we're only about 1% or so, not too far from new all-time highs. The technicals look very good.
The technicals look very good, and so what we could expect from here, traditionally February can be a more volatile month. Larry, is that something our viewers should anticipate?
Possibly. We're coming out of an earnings period which is very strong so far. The mega caps have been putting up good earnings. The big banks and brokers have been putting up good earnings, and we did get a break this month from the core CPI. So bond yields have come down about 30 basis points. So February seasonality, I'm not sure if it's something that's going to come up or not, but the trends overall are pretty strong.
Top-ranked sectors I see here are technology, Larry, and 4 of these 7 Magnificent 7 companies actually reporting earnings this week. Apple higher this morning, Meta at a new all-time high. What is the strength that you see in the chart patterns when it comes to tech names?
So Meta just broke out to new highs, as you said. Earnings have come in pretty well. Microsoft is the only one that pulled back a bit, but overall, the market has responded favorably to the tech earnings. Charts are set up well, and it was really good to see Apple move higher because their China sales were down quite a bit, but the market really seemed to pass by that, and the stock is trading up, so that's bullish.
Certainly Apple feeling the boost today. Meta also higher in today's action, again touching an all-time intraday high yesterday. Is Meta the standout that you see going forward in technology?
It really is right now. They put up very strong numbers. They beat on sales. They beat on earnings. They are all in on AI. Mark Zuckerberg started to really focus on AI maybe 18 months ago. It's really paying off, but I will say not only is Meta very strong, but the Amazon chart is set up very well. The Google chart is set up very well. Alphabet, they've got earnings next week. But technically, Meta is the leader right now, yes.
I do want to ask you about the artificial intelligence space because most of our viewers probably follow it with the stock named NVIDIA. But of course, this week there was a bit of a knee-jerk reaction on that DeepSeek news. Larry, how has that played out in the charts, and what do they show to you?
So DeepSeek is something that we need to pay attention to. And what happened is the semiconductor stocks pulled back sharply. NVIDIA pulled back sharply. And NVIDIA has been under some pressure because the DeepSeek open source model could create some challenges for NVIDIA's business model. But there have been beneficiaries in software. We've seen the cybersecurity stocks start to break out. Software stocks have been very strong. So DeepSeek didn't really put a pullback in all of tech, but money did rotate from semis into software. So I think it does open up some good opportunities.
You know, one of the key takeaways this week, in addition to the technology results, and of course what we've been learning about artificial intelligence, was the Fed's latest rate decision. Everyone expected them to keep rates steady. They did, but we did hear from the Fed chair in the press conference following that decision, as we usually do. What are your takeaways?
So the Fed's in a good position right now. They've cut a few times. Inflation has been sticky, but it has been moderating. Core CPI did come down month over month. The jobs market is very strong. Payrolls are very strong. So I think the Fed can really afford to sit and wait. They've got inflation moderating. Jobs are very strong. And I don't think they really have to be in a hurry to do anything. But I also think that's a positive for the markets, that we don't really have to worry about a rate hike right now.
So from a chart perspective, as you mentioned, no rate hike certainly could prevent any sort of sell-off, but can the market continue to rise, Larry, if rates stay steady?
I think the market definitely can, as long as bond yields stay where they're at right now. So the 10-year Treasury trades right around 455 or so. It had a big breakout to 480 before CPI. So as long as the 10-year stays in this 450, 460 neighborhood, I think the markets can digest that just fine. If for some reason there was a big breakout in the jobs number, if there was a big breakout in inflation, if 10-year treasuries go over 480, I think that would create some technical headwinds, but it's okay right now.
Larry Tentarelli, Chief Technical Strategist for Blue Chip Daily Trend Report. Larry, thank you.
Thank you.